Right, hello everyone. So let's go and look at US30, 24th of September, and you can see on the chart that's my recap picture. It's Consumer Confidence Day, and looking at the past consumer confidence news releases, it's not normally a heavy news event, so you wouldn't really expect to trade it like you would a CPI news or an interest rate news. You don't expect that high injection of volume at a specific time. What you normally get is price just injects a little bit, and price action normally continues doing what it's normally doing with a bit more energy. So that is what we saw on this day, just a sideways movement. We are already in an upwards trend, so we'll just go over how we go about trading that like normal. Go to the chart. So that is here. So same as always, focusing on London opening, and you'd focus on the New York opening and the consumer confidence levels, timing. Discount buy area, drag that along. Premium sell area, drag that along. Even though it's in a tight range and there's not really much movement, you still bring them over, and you just look at price when it gets around there. If it shows you the right sort of price action and timing, then get into it. You also see here, you drag over the PMI, S&P PMI. So going into this day, before the mop even is placed, you got a bullish support off the previous day PMI. You're in a discount buy area and it goes up. Here's the mop. This is the pre-London, and then the London's all the way up here. So we're pushing up, leaving behind clear liquidity. Look at those gaps here. This is on multiple time frames, so that is a clear target for today. This is the London opening. So by this time, you'd be looking for a sell, especially to target the gap down here. We've taken previous highs. We're in this premium sell area, so a sell here would make perfect sense. Once you see this resistance kicking in here, that is your opportunity to get into the sell. Stop loss at the high, obviously, and then you'd get in on one of these three candles running along here. By the time you get to the London opening, you'd be at break even, and you see how price pushes through, retests, and then continues down. You can see how it comes all the way down to the daily opening price. So if we get that and drag it along, that retests the daily opening price. Now, the daily opening price is not always used. It's just a quick little level to use if there's no other levels in that area. So sometimes it's used, sometimes it's not, and it's only used for minor things, in my opinion. So nice sell from there. You'd have got taken out a break even. So that nice little bit of profit to start the day. Price pushes up. This is the previous daily high, as you can see there. So it takes the previous daily high, so you're looking for a reversal in that area. So let's say you got a stop loss hit here, you tried to sell here, got a stop loss hit, and then we go again. You take a sell, obviously that goes into profit, got a little retest, and then a continuation down. So stop loss hit first, nice profit after, and down at the London opening, you took partial profits. Price goes down, clears this low, retest to pre-London, and you took partial profits again. These are just areas you would take partial profits or move to break even. On this move, you might have even got a break even stop loss hit, because if you sold on this candle and then price retrace, you would have just got tapped out at break even if you move price down, which you probably would have, because it's coming down, support and resistance with the previous day high, and then price starts turning. So it all depends on how you manage your trade on this sell. But that's it for the London session. Like always, you get around 1 to 3 setups. One sell here, profit. One stop loss hit here, and then one sell here, which is profit, obviously. Then we go into the New York opening. Pre-New York, high volume time is around that time too. I think it's here. And then you got the New York opening here. So this, we took a sell. Well, I think a few members did too, because I put out a post after clearing this high. This was a reversal before the New York opening. So once you clear this high, we're looking for a sell again. Price comes down. By this time the New York opening takes place, you'd have been at break even. You can see how the New York opening doesn't really do much, pushes down, but then comes down to this imbalance. So if you didn't get this initial downwards move early, you'd have missed out and you'd have to wait for more clarity. Price comes down, hits the imbalance, then uses that area as bullish support. So I know a few members even got this bullish move from that imbalance once they saw that. I did put out a message to the VIP members because I was active at that time, saying watch out for this imbalance. And the reason for that is because you're in that area where they were clearly buying, but it's not a strong area. It's just an area to be used as a retracement area. So that's why you got the reversal there. So price goes up, takes this high once again, and there should be a line running along there to label that as liquidity. So this is the first time in the New York session you got a clear setup. Okay, so this is all creating liquidity. This is pushing up to a premium sell area now. So this is where you would find your clearest setup. Clearing liquidity here, and then start to get a reversal. You'd have entered somewhere around here on one of these candles. And stop loss at the high. That's quite a big stop loss. And then as price goes down, you'd have moved to break even as it hits the New York opening. So by that time, your stop loss would be around here because that would be your break even if you wasn't lucky enough to get it all the way up here. And price goes down, retest the New York opening and pushes down again. So that might have even been another sell because it's using that New York opening level as bearish pressure, a bearish pressure level to push price down. Price continues down slowly and then takes the low here, retest the mop. And then retest the mop is also a valid buy, but I wouldn't take that because you don't want to be taking too much. It's always good to limit yourself to the amount of setups. Like this downwards move here is the main one, so that is the only one I would have taken there. I probably wouldn't have taken this one, this buy. I would have took the buy from the mop if I hadn't got the downwards move. Because retesting the mop, clearly with a rejection like that, is a strong upwards confirmation. So once you saw that, that's a good bullish confirmation. So overall, London session was most favourable. Sell from here, sell from up here. Then the New York session, a clear sell from down up here is my the areas I would look to trade. And that's just going on the same thing. You are preparing for the big volume to kick in to follow the higher time frame bias, but you manage your trade accordingly and you just move your stop loss to break even at the given times, which are when it takes liquidity or hits a key level, and then you take partials when it hits a major liquidity pool or a major key level. So hopefully that helps. That is Tuesday the 24th. Now it's just closing for the day, so I might just do the Wednesday as well.